Hey everyone, and welcome back to another video for today. So Figma, Salesforce, Gitlab have reported their quarterly figures. As you can see right now at the time of recording this, Figma is down 12%, Salesforce down 5%, and Gitlab is down 7%. Now, when software as a service really became a thing, there was this quote that came out that said software is eating the world. Well, today that quote has been upgraded or updated to software is eating the world, but AI is eating software. This is why we've been talking about these software names, right? The Salesforce, the GitLabs, the Adobes, ServiceNow, etc., etc. All of these companies have seen their stock being crushed this year. Is it because AI is eating software, or is it because these companies were just, well, richly priced at the start of the year? I think it's because of the richly pricing that these names got at the start of the year, because as you will see, Salesforce is still doing well. GitLab is still doing well. Okay, Figma is an IPO, it was just too expensive, and now we're coming back towards reasonable prices. Adobe will report their quarterly figures next week. We're going to touch on that a week from today. But these are still good companies, as you will see by the numbers. Now, you don't have to be invested in AI or software in order to have good results. Because even a company that makes good jeans, and that's jeans, this, not jeans, G-E-N-E-S, is up 23% after hours after reporting its quarterly figures. Of course, that's American Eagle. But unfortunately for you, we're going to talk about software. So we're going to focus the video on Salesforce, GitLab, and Figma. So stick around for all of that. Hit all the buttons, we'd really appreciate that. If you want to support me even further, do check out the link down in the description and the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And of course, a special thanks to Fiscal.ai, previously FinChat, for sponsoring this video. If you don't know what Fiscal.ai is, it's basically this stock research platform. And guess what? Salesforce, GitLab, American Eagle, Figma. Well, on the platform, all of the results are already updated. Okay, all of the results already updated. We even got here the transcript. Whenever the earnings call is done, you get that updated right here. You have the earnings release. You have the presentation, the slides, if the company does release slides. This happens a couple of minutes after the company releases that on their own website. So it's extremely useful, especially during the earnings season, but you can use it throughout the year, right? Because throughout the year, these companies do have analyst conferences. And even there, for example, Salesforce had an analyst conference back in June. We've got the whole transcript. Of course, it needs to load, voila. And if you don't want to go all over it, you can just click here on AI summary and it gives you just that. Now, speaking of, here they said, this was in June, they said Agentforce deals closed 8,000 deals to date. Now, if we go to the more recent report, the more recent report will give us an updated number. And that updated number, if we look at the transcript or the press release, it tells us right here. First of all, we've got here Data Cloud and AI annual recurring revenue that surged 120% year over year to over $1.2 billion. This momentum is further evidenced by the successful launch and rapid uptake of Agentforce, with over 12,500 deals closed and over 6,000 paid deals. So in June, they told us over 8,000 deals closed. Now, in September, start of September, they are telling us here 12,500 deals closed. But they also told us last quarter that Agentforce will have a material impact only in fiscal year 2027. Now we're in their second quarter of fiscal 2026. Now, of course, we're going to dive a little bit deeper. By the way, beats across the board for Salesforce. Again, all of this available to you on Fiscal.ai. There is a link down in the description and in the pinned comment. If you use my link, you'll get 15% off, and you can also try out Fiscal Pro for free for 2 weeks. So this was Salesforce Q2 results, 34.1% non-GAAP operating margin guidance for fiscal 26, $41.1 to $41.3 billion for fiscal year 26 total revenue guidance for Q2. That's $10.2 billion in revenue, an increase of 120% year over year for Data Cloud and AI ARR, over 12,500 Agentforce deals that we've discussed, and 12 to 13% operating cash flow growth. That's the guidance for fiscal year 2026. Now, as you can see right here, great recap from Stock Market Nerd on X. Beats across the board, and guidance was also slightly raised. Now, the thing here with Salesforce, and you're going to say, oh, why is the stock down? It doesn't make any sense. Well, again, it's about what the market wants to see. Despite the beats across the board, the market just wanted more from Salesforce. I still think that Salesforce at these prices make a lot of sense. Again, it's not going to provide you with super high double-digit growth. But in a market where a lot of other, let's say software, maybe AI names are stretched, a Salesforce which continues to compound over time is doing what it should be doing. And I do think that Agentforce, yes, it's going to take, again, a couple of quarters until you see a material impact on the financials. But would you like to enter Salesforce before or after that happens? Probably before. So all in all, this is the quarter. This is Q2 fiscal year 2026. Again, it's not super high growth, but it's still growth, close to, 10% growth here across the board. Good margins, very profitable business. I mean, revenue did accelerate a little bit, right? From 7.6% year-over-year growth to 9.8%, although the year-over-year comparisons are, of course, easier, and they're going to get easier for the next couple of quarters. Looking at the different segments here, marketing and commerce, integration analytics, platform and other, service revenue and sales revenue, compounded annual growth rate for the last 5 years is in the double digits. Some of them in the mid double digits, high double digits. For example, integration and analytics, compounded growth 16%, platform and others 21%, then the rest are a bit lower, 13 and close to 12% or so. As for remaining performance obligations, usually, right, the January quarter, that's usually the big jump, as you can clearly see right here every single time. And then the quarters after that, RPO does come down. Now, what we did see is that RPO did accelerate for 2 consecutive quarters, and now this time it did only grow 12% year over year. But okay, still growing faster than revenue. As for full year, fiscal year guidance, did increase here a little bit of revenue, did hold the subscription and support revenue growth. GAAP operating margin is coming down, 21.2% compared to 21.6%. Non-GAAP operating margin is up 0.1%. GAAP diluted earnings per share is also down here approximately 16 cents or so. Non-GAAP diluted earnings per share is up. Operating cash flow growth is up as well. And free cash flow growth is up now to 12 to 13% year-over-year growth compared to the 9 to 10% year-over-year growth. And this is the upcoming quarter guidance, so Q3 fiscal year 2026. They expect revenue to grow between 8 to 9% year-over-year growth. And like I said, since the comparisons are easier, maybe the market here again was expecting more than just 8 to 9% year-over-year growth. Current RPO growth slightly above 10%. So Salesforce is doing what it should be doing, but it's not enough for the market. That's the thing here, which is why we're seeing the stock now go back down to this is right now $242 at the time of making this video. This is basically the downtrend line. It cannot go past it at the moment. Moving on to GitLab. This is another name that did get crushed, right? It's down 40% from the highs back in February 2024. And even for the last 12 months, it's down around 40% or so from its highs. This is still a company that is growing quite rapidly, but here as well, it's not doing enough to convince the market that AI is a tailwind for the company and not a headwind. So here as well, we're on fiscal.ai. We can just look at the transcript real quick or the report here or AI overview. So total revenue, $236 million, up 29% year over year. Total remaining performance obligation did grow 32% year over year, so that's growing faster than revenue growth. They told us here a couple of things. They said, one, GitLab is strategically deepening its AI integration with the launch of the GitLab Duo agent platform in public beta, positioned as an extensible AI orchestration platform for human AI collaboration. This platform's ability to integrate various AI agents like Anthropic Claude Code, Cursor, Amazon Q, Google Gemini CLI, and OpenCode signifies a significant advancement in empowering developers with intelligent AI outcomes using rich product concept. A notable strategic shift includes the signing of a 3-year collaboration agreement with AWS. This partnership aims to expand access to GitLab dedicated, a single-tenant offering crucial for highly regulated industries and the public sector by leveraging cloud infrastructure for compliance requirements, data residency, and private networking. They also told us that there is a CFO transition. Brian Robbins is, I believe, going to Snowflake. So he's been replaced here by James Shen. Now, GitLab, as I said, is a fast-growing company. It's, of course, not growing as fast as before, but still, this is now a small reacceleration in growth from the 26.8% year-over-year growth last quarter. This quarter, it grew 29.2% year-over-year. Dollar-based net retention rate is still very high, right? It's still 21% above 100%, so that's good, but it has been coming down quarter after quarter. So here again, the question is, okay, it's good, but how low will this go? Moving on to RPO. As we've seen, it's growing faster than revenue, but here as well, growth is coming down, still growing faster than revenue, and well, it's still up and to the right. So that's the most important thing here, but same question time and time again, how low will we go? Customers with ARR of above $100,000, this as well is also growing fast, but it is decelerating, right? We're now at 24.9%. That's slower than a quarter ago, slower than 2 quarters ago, a year ago, etc., etc. So it's nice that we're still growing quickly, but the question remains, how low will the deceleration go, and can AI really be a tailwind for this company? And so if we look at the stock right now, you can see that it did struggle to go above that 200-day moving average back in May, and even back at the end of August, it did go above it, couldn't stay, we went back down, and now it seems like tomorrow we are going to open below the 20 and the 50-day moving averages. Moving on to Figma, a very, very successful IPO, but just like with a lot of successful and popular IPOs, it's never worth chasing. And that's why we've been talking about Figma during the live streams and when it went public and saying, look, great company and all, growing quite quickly, but when you compare it, I know it's not apples to apples, I know, but when we compared it to an Adobe, for example, it just didn't make any sense. Didn't make any sense. And so I am now, yes, I am quite happy to see this thing come back down, right? I think the IPO price was $33 or so, but the date went public, I think it opened at above 60 or something like that. So now we're back below 60 and we can go even lower. This is still a company worth around $30 billion or so. Yes, it's growing quite quickly, but yeah, it was just a very, very much hyped IPO. Here as well, I think there is a lockup period that's expiring, so stay vigilant on this one. So for Figma, revenue came in at $250 million. That increased 41% year over year. Net dollar retention rate here as well, pretty good, 129%, but that is also coming down a little bit. We were at 134% 2 quarters ago, then 132% a quarter ago, and now at 129%. Of course, we're also lower back in 2023, but let's see. Again, just like with GitLab, this is still very good. Above 100% is good, and this one is, of course, way above 100%. Now, if we look here at the number of paid customers with over $10,000 in annual recurring revenue, still growing quickly, right, at 31.3%. But here as well, we are seeing a deceleration in growth. Looking at the same thing, but here for $100,000 in or over $100,000 in ARR, also growing fast, actually growing faster. But here as well, we can see that growth is decelerating. And so if we look at Figma stock, you can see, right, the date went public, this thing shot up and up and up. And now, well, we are experiencing, let's see how big of a crash since the top back 1st of August with the after hours action, we will be down close to 60%. Does this mean you have to jump in? Probably not. I think you will have plenty of time to think about whether or not you want to have exposure to Figma or not. I also do think that next week, when Adobe will report its quarterly figures, I think that could also provide us with, if I can write the ticker here. Sorry, it's late, but anyways, this is Adobe, right? Adobe has also been struggling, right? It struggled to go above the 50-day moving average at the end of August. It's also down a little bit in sympathy with the other software names and also because of Figma. But again, with Adobe's valuation, it's not overstretched. It's still expected to grow low double digits. It's still very, very profitable, buying back shares and all of that. But here, again, it's the same question, right? It's software is eating the world, but AI is eating software. So can AI be a tailwind for these names? That's what the market wants to know. And as long as that question is not getting a clear answer, these names are probably still going to be hated for, well, whatever long period it will be. But it could also be a good opportunity for investors. Now, again, we've talked about the Salesforce, we've talked about Adobe. I do still think there is value in those names because, well, fundamentally, these are strong businesses until proving otherwise. But yeah, in the meantime, don't expect it to shoot up 30%. That's about it. So all in all, to recap, Salesforce, good numbers, just not good enough for the market. Figma, okay numbers, but I guess, yeah, when you go public at a super high valuation, you have to over deliver. That didn't happen. Gitlab, same thing here. Good company, good growth, but some guidance did not meet expectations. So that's about it. That's the reaction we got. If you have American Eagle stock, congratulations. I do have the genes and they are very good. So that's all I've got for you right now in this video. If you enjoy this type of videos, hit all the buttons, check out fiscal.ai to get 15% off, and we'll see each other tomorrow morning for the live stream. Bye-bye.